jump into today. And then Allie, you can tell me if I'm sharing the wrong screen like I do sometimes.
Yep, sure will.
That's the one I'm going to share. And then is it sharing the right mode or is it sharing presenter mode?
You're good.
Yeah, I'm getting better at it. Okay, cool.
Mhm.
All right. So today we're talking about how lenders are using artificial intelligence for credit issues. Before we jump into the discussion, we always like to start by introducing ourselves. Now, every week we do a live, it's always Thursdays, 2 p.m. Pacific. 1 week it's directed towards consumers, and then the opposing week it is directed towards professionals within the industry. Allie, I'll let you introduce yourself first.
Okay, so my name's Alicia Ault. I go by Allie. I am a credit expert. I've been in the business for 20 plus years. I've worked in all sorts of lending, credit repair, real estate. So I bring a lot to the table in terms of how credit works. And together with Ivory, we have founded Credit Score Pro, which is our AI solution to help people with credit and financial issues and literacy.
And
And
my
I'll
name
let,
is Ivory. Oh, sorry, go ahead.
I was going to say, and I will let Ivory say who she is.
And I'm Ivory Becker, co-founder of Credit Score Pro AI. My background is similar to Allie's, but focused pretty heavily in regulatory compliance within the banking industry, credit repair, financial planning as well, and a little bit of lending, a touch on lending after the financial crisis, which is quite interesting. We came together and just realized there is a massive issue when it comes to financial literacy and resources and access to credit. Because of that, we decided we wanted to really place a heavy focus on how we can create solutions, not only for consumers, but also professionals who are meant to be an expert and be that advisor that consumers can turn to. And I thought we'd start with our mission. So at Credit Score Pro AI, our mission is to revolutionize financial assistance, financial literacy, making it accessible, engaging, and personalized, to give everyone an equal chance to have a strong credit score, and to provide the tools and resources to empower not only consumers, but also professionals, nonprofits, and educators. And why is this important? Well, in the US right now, we are having a growing financial literacy crisis. And we're going to explore this a little bit and then dive into how the AI is assisting with this crisis and acting as a bridge for professionals to help more consumers and also be more successful in their fields. So, 73% of American adults rank their finances as their primary stressor. And with younger generations, we're seeing that as an even higher percentage, with Gen Z being at 82% and millennials at 81%. And 63% of Americans are living paycheck to paycheck currently. We all know things are pretty expensive right now. Inflation has impacted every single one of us, from individuals to businesses. And 53% of Americans don't have an emergency fund. And when we look at those that have a household income of less than 50,000 per year, that jumps up to 74%. And 60% of Americans can't cover the cost of a $1,000 emergency with cash from savings, which puts them in a very scary place with a minor financial emergency. 15% of adults last year lost over $10,000 due to a lack of financial literacy, which is huge. That $10,000 could help them buy a home or purchase a car. And why does this matter to you? So 25% of American adults don't have anyone to ask for financial guidance. And this was based on a recent survey. And this means if you are someone, for example, within specifically the mortgage industry, you are their resource. And the reason behind that is, and why I'm focusing on the mortgage industry, is the typical first big financial goal that a consumer has is buying a home. That's the first thing they think of. And it means they're going to turn to you as a loan officer to learn how they become financially ready or how they become financially stable so they can buy that home. And not only that, they're going to expect you to have all of the answers. And if you don't, to at least have the resources, or they're going to go to someone else that does. And you may be thinking, well, I'm just not going to work with that type of buyer. I'm going to work with the buyers that have the higher credit scores, that are more financially literate. But as we will review, we're likely to see some drastic changes in the type of consumer that's looking to buy. And if you want to stay at the top of your game, no matter where we are in any market cycle, being able to navigate these buyer situations or these different types of borrower situations is really going to be pivotal. So let's look at some data. This is back from 2020, and this is what mortgage closing rates looked like. We saw just over 69,000 people inquire about getting a mortgage. They're interested. They're, dipping their toes in to see, maybe I want to get a home, maybe I don't. Now, we lost 34% of those people going into the application stage. After those applications went through, 47% of them were lost going to the closing table. So it's a huge loss of people down that funnel. I don't know, Ali, if there's anything you want to add here, feel free to interrupt me.
No, you're fine. You're fine.
And let's look at the top denial reason back in 2020. So the top reasons are, with, I believe it was 53% to be exact, credit history and debt to income being those two factors that make up the biggest denial reason. So all of these people who were denied still wanted to buy, and the only thing that was stopping them was credit and debt to income. So these are the people that would eagerly like to fit into your pipeline if you're a loan officer, if only you had the solution for them, hint, hint. And we're here to talk about what that solution is going to be. And spoiler alert, you saw it in the title, it's going to be about AI. And we just haven't gotten to how that AI is going to help quite yet. So who is in the housing market? Let's start there. So Americans originated 1.1 trillion in new mortgage debt in the first 3 quarters of 2023. Important thing about that, yeah, feel free. Go ahead and ask your question. You can unmute or type it in the chat.
Credit applications. Could it be that AI could help to make sure that everything is complete before it comes to the vetting stage? Or could it be just simple forms which make it mandatory where you cannot proceed to stage 2 without completing stage 1? I'm curious to find out why incomplete applications is still an issue in 2020 or 2024. Thank you.
Yeah, absolutely. Ali, I'll let you talk a little bit about it too, but we've seen AI being used to essentially go through, interpret documents that have been received, determine whether they're authentic, right? We don't want fraudulent documents, determine if there's things missing from the documentation, and then essentially give that first look and that quick approval. Not every company is using that. However, so some people are still doing things the old way and some consumers still want to do things the old-fashioned way as well, especially those older individuals.
And I know she mentioned something about the incomplete application. As a loan officer myself in the past, I will say that, there's oftentimes an incomplete application because we discovered a credit issue or a DTI issue or some issue that was going to prevent a complete application. So I think that, is AI a solution to that? Yes, because if that's the reason that we have the incomplete application, now we can transition them to get the help that they need so that now we can come back and complete an application. So yes, I think AI is a solution to that as well.
Yeah, absolutely. We're trying to bolt on AI into the interface so that when the applicants are filling it out online, I'm sure there's no paper-based applications anymore. Please tell me no before I fall off my chair. But I hope everything is online, and then just like chatbot for customer service, maybe these interfaces could come in where people cannot proceed to stage two because it's all the AI is put it into the application forms where people have to fill stage one before they go to stage two. I think that'll really streamline the process. Thank you.
Yeah, absolutely.
Great.
Absolutely. Yeah, and when we look at going back here, let me find my train of thought. Oh, when we look at in 2023, who were the types of buyers or the borrowers, excuse me, that were getting mortgages? 77% of them were super prime borrowers. So those are going to be those individuals with the higher credit scores of 720 or greater. And only 3.6% were the subprime borrowers with the scores below the 620. First-time buyers were 32%. So we did see more first-time buyers in 2023. And the typical seller of a home was 60 years old. And on average, we were seeing sellers stay in their home for 10 years before selling. So why is that important? Or why are we putting that all together? We have older individuals downsizing or getting out of the market and leaving their homes for younger buyers. And with 77.4% of those being super prime and the average person staying in their home for 10 years before selling again, we're likely to see an influx of both the younger buyers, likely the millennial generation, but also likely those that have those lower credit scores. And to add on to that, what we've also been seeing when we relate financial literacy to this is a drop in financial literacy of about 23%. So 23% less literate individuals as we go from older generations to younger generations. So each generation drop is about 23%. And
so I think that,
yeah,
important point is that that's when we look at last year's numbers, we're going to see probably a very big difference. Now you're going to show that screen in the coming years, because now we have a completely different type of borrower, less financially literate, likely to have lower credit scores, likely to have more debt, likely not to have the savings. And those are the people out there in the market, and the people who last year were in the market, or in the year before especially, were those people with the higher credit scores. They got that loan, guys. They bought the home, and they are not moving with the interest rates and the financial structure that we have right now in our economy. They're not moving. So we have to realize that this is a change that we all need to meet the demands of. And that's why we're talking today.
Absolutely. So millennials want financial literacy at the palm of their hands, right? They want to access with their phones. I think today in general, we've become really spoiled. We want things and we want them now. So when we look at that,
Jan said, I hope there's no paper applications, right? I mean, the millennials are not doing paper applications. If you try to hand a paper application to a millennial, I'm not even sure they're going to know how to fill that out. But if you hand them a cell phone with an app on it, they're going to figure it out in 5 seconds. So we're definitely dealing with a different generation, and we need to meet the needs for that generation.
Absolutely.
I will quickly add, it's sorry if I can quickly add on the previous slide. You had unverifiable credit. Is it applications or history? I think it was it was a large proportion there on your pie chart. Yeah, that's it. Credit history, unverifiable information. Speaking about Gen Zs, just 2 points that I want to bring here, if I may, please. Can I?
Absolutely.
Yes, please.
The first one was, are we thinking of all the Gen Zs and the younger generations who want to become millionaires very, very quickly? They don't want to follow the traditional path, and hats off to them. They're brilliant, intelligent folks as well. Is it because they're not using credit cards and they are probably using Bitcoins, which are not registered to credit history? I don't think Bitcoins and Ethereum and all those are still linked to credit history. Correct me if I'm wrong, one. And two, is it that they're all paying by cash because they're all super rich guys? They don't pay by credit cards, so they don't need credit history because cash is king, and the very rich, maybe that population is increasing because we increasingly see that people are chasing for LinkedIn followers. The last money is becoming a very monetary society. That's one. And the third one I wanted to raise is also that Gen Zs particularly do not want to own homes. So they want to be traveling as nomads. They want to earn income on the go. Therefore, they don't want traditional jobs to earn, to save for a mortgage. Is that why we have that large proportion of unverifiable information? I'm quite keen to find out the sample size and the reason for the unverifiable credit history, if we know, please. Thank you.
So the unverifiable, just to clarify, is just this part right here. It's just kind of over to the side. So it's just this little sliver. And so the credit history is the pink. So the unverifiable information isn't necessarily linked to the credit history. No, that's okay. That's okay. Allie, do you want to step in and answer some of the other questions though?
Yeah, I think there's a couple that I would like to address. I think the Gen Z people think that they're just out there to become millionaires as fast as possible. I don't necessarily believe that that's necessarily true. With my surveys in colleges, they want to be financially literate. And they're searching for a place to find that information and find it in a trusted way. And they're struggling with that because the colleges aren't teaching it. High school didn't teach it. All these places, parents don't know. So I think their real thing is they really want financial literacy because they do want to be financially stable. They want to have it all. They want to have, financial stability. They want to have the house. I don't believe that they don't want to have the house. I don't believe that they want to be nomads. I think that they want to find homes, but they're looking at it in more an investment type process versus I'm going to find my home to live in forever. I don't think they're doing that. And I think that they're very smart. They want to figure out a way not to work, right? When you talk
absolutely.
about and be able to have that flexibility in their life. So they're looking for those jobs that allow for that. So we're just talking about a different consumer, but we're still talking about the same people, right? Everybody from generation to generation wanted financial literacy. They wanted financial stability. The problem is we have not in society met that need for any of the generations. But the millennials, I believe, are in demand for it.
Yeah.
More than any other generation.
And to add what you're saying, Allie, too, we haven't needed to use credit so prolifically until recent generations, right? Until recent history, if you will. Prior generations didn't have to rely on their credit as much as current generations do.
Yeah. And I do believe also that millennials and Gen Zs, they are relying heavily on credit. They have a huge credit card debt issue. So I think credit is, still something that they're relying heavily on. Bitcoin and stuff like that, that's out there, but I don't have any, I can't show you any numbers on that. And I don't know the numbers, but I think we would probably see a smaller number than maybe some people think in terms of the usage of that by millennials anyway.
That's an interesting shift. Thank you. That's enlightening. Thank you so much.
Yeah. And I think this was a wonderful segue too, because the next few statistics before we get into the AI are just on the education side. So 41% of people have said they had to teach themselves about personal finance in general. And 63% of American adults think that personal financial education should be taught in schools. 77% want politicians to push for financial education in schools. But interestingly enough, even with that data, there are only 20 states that require high schools to teach financial literacy. And even with that, over half of the young adults or children, I guess kids and young adults, age 15 to 18, failed the financial literacy quiz after already having that financial literacy education at school. So I want to let that sink in. Even with the literacy that they're teaching in the 20 states, 50% were still failing the financial literacy quiz.
So I think we have an issue there. Number one, are we teaching the right things at that age? Number two, are we teaching it correctly? When we're talking about children who are 15 to 18, there are some things that they should know and that we should be teaching them in schools. Absolutely 100%. But I think we might be teaching them the wrong things, that it's boring and it's over their head. And then where that information needs to be taught, that core stuff that, hey, you're an adult now and we got to, you know, make this happen. That information is not being taught in the colleges. And I think that's where we're failing more than anything, is providing the necessary education in the college institutions.
Absolutely. And if we hyper focus on the millennial, excuse me, the millennial generation, because these are the individuals buying right now, doing most of the lending, most of the borrowing in general, even beyond just looking at getting a mortgage, only 16% understand basic financial principles. And that was based on doing, they actually tested millennials, and before they did the testing, they estimated on average they would get a 6.2 out of 10. But they didn't. They got only 35 to 55% of the questions correct. So people are also overestimating their own understanding on top of not having the financial literacy or financial education. So, Allie, I'm going to let you take over on here. I've talked so much at this point.
All right, so we're just talking a little bit about how AI has helped credit professionals in the industry. So like we have mortgage companies now that are implementing Credit Score Pro's AI process completely throughout their system. So this is a really good thing, and I'm hoping more and more mortgage companies will adapt this because I think it's absolutely essential. So a client goes through a process to get a home loan and they get denied. Rather than the loan officer providing them with a wayfinder report that says, here's some general things that you can look at doing, or rather than them just not getting a phone call back or getting the help that they need or sending them off to some credit repair company, some mortgage companies have adopted the process of immediately sending them through Credit Score Pro so that they're getting this AI solution right away that is trusted, that works, that's easy, fast, and efficient for the consumer. So that's really helped. And the mortgage companies that have done that, they provided a lot more value to their consumers. They're getting more referrals because of it. They're providing a better customer experience within their process, but they're also closing more loans because those individuals that did need to seek help and utilize the AI Credit Score Pro were then able to come back to that lender who they now trust because they helped them and they were able to close a loan. So they're seeing a much higher close of loan rate. Credit and lending professionals are using it so that they themselves can better understand credit, which I love. I think this is great. So we have, loan officers, real estate agents, other credit professionals out in the world who are considered advisors, and individuals are coming to them and they're wanting them to know the answers to how does credit work? How do I fix this situation? And as a credit professional, I think it's so very imperative that this type of information is understood so they can be that trusted advisor. And, you can take all the CE classes you want, but this is not one of them,
Right.
and that's very unfortunate. So we're lenders out there in the world. We're interpreting credit to decide if the person's pre-approved for a mortgage loan or whatever that loan might be. But we ourselves don't even understand credit. We weren't taught it. And that's a gap that we need to fill. That shouldn't be there. And so we have a lot of credit professionals who are actually going through the Credit Score Pro AI system so they can be a trusted advisor to understand credit and to really give good advice. Because I'm sorry if you are a credit professional and you're going on TikTok and you're getting your credit advice from TikTok and you're sharing that with your clients, you're doing a very bad disservice to your clients. And it's going to bite you in the butt later when you are now no longer considered a trusted advisor because you gave bad advice. And I think that's so important. We have to make sure we're not spreading myths and information that's inaccurate and really understanding how this whole process works. The United Way is piloting a program where they're using Credit Score Pro so they can help individuals. They already have this tax program to help individuals get as much refund back as possible. And now they want to incorporate Credit Score Pro in that process so that when the people get that nice tax refund, they actually have a plan to help improve their credit and their financial situation by using Credit Score Pro. So that's another way that professionals are using it. Nonprofits, mortgage lenders, all of them utilize the service to help with getting the credit scores up so clients can utilize some of those assistance programs like the down payment assistance programs that are available out there. They all have a credit score requirement. And some people fail to qualify for those, meaning more money needs to be out of pocket if they have it. So they're scrambling for funds to do that, or using their entire tax refund right now to do that, when if they had a little bit of a bump in a credit score, they could have received down payment assistance and allowed them to save that money in their savings account for, that emergency fund that most people don't have. So Credit Score Pro's AI process has really helped a lot of people in the professional space help their consumers and really
Right.
help them change their lives.
Right. And the goal of these programs is to help more people transition into home ownership, but we are facing this barrier where even with all of these wonderful programs, people can't utilize them because of credit being that stopping point. So let's talk about what the AI actually does. So Allie, I'd like you to explain this part, and I'll go into some of the other features like the education side.
Okay, so Credit Score Pro is an AI software. And what it's going to initially do when someone signs up for Credit Score Pro is it's going to attach the credit report. And it's going to be analyzing that credit report to look for negative information. So this is a great image right here. Okay, which one are you going to show me?
I'll do this one.
I like this one. Okay, so when it brings in that credit file, it's going to obviously show, like you see on the screen, it looks just like this. This is exactly what it looks like, the credit scores. And then it's going to allow the client, it's going to analyze it, and it's going to show the client all the negative things that are on their credit report that could be bogging their score down, right? We see these scores here. This is not, these are not great credit scores at all, right? This person would have a major difficulty getting any lending at this time. So it's going to analyze that, produce the results of what those negative accounts are. Did you want to show that next? Is that the next screen that shows that?
The next screen's looking at the raw data, but I can go here. We can go back to raw
here.
data.
Okay. So here's an image, for instance, when you see the negative accounts, the client gets to select what negative accounts they'd like to dispute. The AI is actually going to create the dispute reason. Again, it's AI, so it's very important. But a consumer can change that reason if they chose to. I tell all my consumers, do not change it. It's AI. It's working on your behalf. It knows what it needs to do, unless the item on your credit report is really fraud. Okay, and then there's a selection where you can change it. So Credit Score Pro does all that for you. You don't have to think. It knows what to do. You're just going to select which counts you want to dispute. Obviously, if you have 10 negative accounts, select all 10. There's no reason not to. So that's the first thing that it does.
May I add?
Yes, go ahead.
Well, I think one of the important factors as well is because it is machine learning, it is also adjusting based on its success rates, based on what has worked well, what hasn't worked well. And it continues to refine its strategies as it re-imports new credit reports for that consumer. And based on other users. So it's not just based on the results of that specific user, but every single user of Credit Score Pro.
Right.
And I don't know if you want to.
It's reading a raw data credit report. So this is different than what we see. So if we look at this side of the screen, you see like a credit report, which you normally would see. And then the other side of the screen, you see all this code. That code is what we call a raw data credit report. It's a lot of code that indicates what you see on the other side, except that the other side doesn't show everything. It's showing what the vendor who sold you that credit report wanted you to see. But there's a lot more to the picture that's on the raw data credit report. So when Credit Score Pro gets that credit report, it's actually reading that raw data. So it's looking for any and all errors that could be on that data, because the credit bureaus by law can't have errors. So if we find errors, that helps to get items removed faster, right? Because they either have to fix the error or they have to remove the negative information. So that's important. But it goes a step further. Am I allowed to go into the next part of that, or
let's answer
Jan's
Jan's question real quick first.
Okay.
I just had a quick question on the raw data. I know that many AI models have data which is going back only to 2020, but I don't know whether this particular credit AI that you've developed for mortgages, does it go very historically, like Experian, probably 6, 7, 8, 9 years? I don't know. What is the timeline we're looking at for the AI model for mortgages? Is it the same as ChatGPT, which has only 2020 data?
So the data that it's getting is from the raw data, and the raw data will have 7 years of history for the consumer. for any negative data, because after 7 years, that negative data would be removed. For any positive data, closed data, that kind of stuff, it's going to have the past 10 years.
Oh, and you've loaded that onto the AI model?
Yes.
Oh, brilliant. Thank you. Because most of the models I'm hearing so far is only going back to 2020, at least ChatGPT. I'm not sure of Gemini and stuff, but I know mortgage is a different AI that we're talking about. So that's good to know. Thanks.
Yeah, so we're able to pull the information based on the credit
Directly.
report data
Yeah.
from,
Experian.
And when you say mortgages, I'm assuming that maybe some of the AI models are only looking at the last 2 years because that's what they're hyper focused in the mortgage industry on the last 2 years. So it may be partly that.
And also because Experian has all the data and you've just linked everything, it's pretty easy to build it that way. And it's good that you've done it that way. I was just checking the timeline. That's it. Thanks.
Yeah. Sure. Yeah. Absolutely.
Cool.
and let's see, we got there. Oh, one little segue.
Yeah, so I'll go into this real fast. So once the consumer does do the disputes, like I said, it's real just a couple clicks that they're going to do. Automatically, the dispute letters would be emailed. There'll be 3 emails that Credit Score Pro will send out, one for TransUnion, one for Experian, one for Equifax. And those will be the dispute letters with the cover page that gives instructions on how to print and mail out those dispute letters to the credit bureaus, which I highly recommend because the credit bureaus are really tightening down on disputes in general. Okay, well, they always have, but they're getting even more so because obviously it costs them a lot of money every time you do a dispute. So their goal is not to even look at them, right? So they're going to try to come up with any way possible to avoid answering a dispute letter. So it gives instructions on how to do it so that you get the best out of Credit Score Pro. However, we do have to meet the needs of the generation, and a lot of millennials and even Gen Z, they don't have a printer. I even had them tell me, I don't even know what a stamp is, and I've never put a stamp on anything. I've never filled out an envelope. So like some of these people, they don't even know how you put an envelope together, which is fine. We need to meet everybody where they're at. So Credit Score Pro does have inside of it a little button that you can click, and that links with a system called mail-io, which will then send out those letters for them. So there is that availability there. Again, we have to always, figure out which ways to meet everyone who might be using the platform.
Yeah, absolutely. And this is the first part of Credit Score Pro AI, is focusing on looking at the report, identifying errors, finding opportunities to allow for disputing that negative information to help that consumer with improving the score. Because 35% of a consumer's credit score is that payment history. So it is that biggest overall factor. But what's also really important that is often ignored, especially by those within the credit space, is all of these other factors. In the credit repair industry, they hyper focus on just that dispute side of things. And you will see other systems or software out there that helps individuals or consumers with disputing, not to the level that ours does because it is AI, but there's a missing link, which is looking at these other factors. And so we wanted to make sure we brought a solution that bridges that gap. How do we optimize the good accounts that are on the report that are great, that are helping the score, but how do we get more points out of those great things on the report? And then where are we not influencing the credit score algorithm? Where are we missing these pieces, and we can fill in that gap to boost the scores even further? And then compound that with what is that client or that consumer's goal? So let's craft a plan based on the goal, because there are different credit scores used in mortgage lending, credit cards, auto lending. There's different versions of the credit score depending on how old the models are, et cetera, right? There's a ton we could go into there, but we won't today, of course. So with Credit Score Pro, getting a credit action plan is easy. And Allie will talk more about that.
Yeah, so this is one of my favorite parts. I got a lot of favorite parts, but we can have a goal in mind, but not know the steps in order to reach that goal. And like Ivory said, we're trying to bridge that gap where, yeah, we can focus on all the negative stuff, try to get as much negative stuff off on the credit report as possible. But if we really just focused on that, we're never going to be anywhere than where we were before. Okay. because there's so many other things that need to happen, not just for the credit score, but financially for a solid foundation, right? So Credit Score Pro, what it does is you'll go in here, it's going to ask you what your credit goal is. So are you just looking to have great credit? But are you looking to buy a house? Are you looking to get out of debt? Are you looking for business funding? What are you doing? And what it does at that point, it's going to read that raw data credit report again, right? And it's going to analyze that to produce for you an AI generated action plan that specifically tells you what you need to do for yourself. This is not something you can't take this action plan and hand it over to Joe down the street, because this is tailored for you based on what's on your credit report and what your goal is. And so if there are gaps in that pie chart that Ivory was showing, if there's gaps there, it knows how to fill those gaps, and it's going to tell you what to do to fill those gaps, how to optimize the things that are good, notify you of the things that are negative and how we need to get those resolved. So it's a very robust action plan that allows a person to take action. So they're not, and this is the worst thing, I think, I feel so bad. And this happens this time of the year, big time. People get their tax refund and they go, I'm just going to pay everybody off. And they think that's going to fix this problem. And it doesn't. So what I love about this action plan is it tells you specifically what to do. So you're not just haphazardly doing something thinking you helped yourself, and you get the results that you need. So this is, obviously Ivory knows, that's why I'm talking about this. This is a passion of mine. I believe like in anything that you do in life, you have a goal, you have to have the action steps to achieve that goal. And this is what that does for you.
And I'd love to add on to that as well. If you notice, we chose to show an action plan with someone that has great scores. Even with exceptional scores, you still have score improvement potential. So Credit Score Pro is not necessarily only meant for someone with credit damage. It's not only meant for that person in the 500s or the 400s. It's meant for anyone who wants to maintain a strong credit score, even if they already have good credit. I can't tell you how many times we've heard, wait, I don't understand. I had an 800 and my score just dropped and I don't know why. Well, now you will know why. And better yet, you'll be able to preemptively prevent those things from happening. If it's not, of course, related to you didn't pay something on time. Hopefully you're doing that. And then the other thing, and then Jan will answer your question, is as you achieve these steps, it's going to show you the top steps, right? As you achieve these steps, your action plan is automatically going to be updated on its own every time a new credit report is generated. But beyond that, the user can proactively update their report as well, or change their goal. Basically, it's going to check off those boxes as they have completed a step off the action plan. It's going to be replaced with the next most important items. So, yeah. Anything I forgot there, Allie?
No, I think you did great. Yeah, I think that was important that you brought that up, because there's so much that you could do with it. It's not just about, Credit Score Pro is not just about getting the highest credit score. It's about the overall health of your finances and educating you, which we'll get into here in just a moment.
Yeah, and Jan, go ahead. You might be on mute.
Oh, sorry. My screen froze. So, I think here on the graph at the very bottom, action 2. I guess here the goal is to improve your credit score. Correct me. It says activate cards, and I'm just trying to read through. It gives 3 cards there, and I'm just curious to find out there the activate the Cinnamon Wards card. Are these cards that actually improve your credit score, where the automated AI is giving you options that if you get these cards and make a purchase, it's like a cashback card or something which gives you more credit on your file? Credit score on your file?
So, Ivory, can you go back to that graph with the pie of how credit works?
Yep.
Okay, and then I'll let you talk, because this is probably gonna.
Yeah, we're gonna say the same thing. I mean, of course.
Go ahead. Go ahead.
One of the factors, the second biggest factor is credit utilization, which is really just looking at what is your balance versus your credit limit on those revolving accounts primarily. But if those accounts are not active, then you are not influencing this category. So if a card becomes, I call it stale, but essentially if a card becomes stale, if it hasn't been used for a period of time, you're missing out. That is a missed opportunity to help boost your credit score. So Credit Score Pro AI is essentially saying there on that action plan, hey, these cards are stale right now, so they're not helping you. We need you to make those cards active again. That way they start influencing your score. The credit card company may not have closed that account. You just haven't used it. So the algorithm is saying, hey, we don't have enough data, enough recent activity on this account to factor it into your score.
They usually say that's a very good indicator because people might have cards that is lying inactive in your cupboard and then you've not used it. So that's brilliant. Usually, I guess in the UK, it is always keep your utilization 25% on your overall allowed credit, if you see what I mean. Is that the same in the US as well? Is it 25% of overall limit or less?
Low utilization is important in general, right? We want to just show responsible use of cards without overusing them, right? So
and your ability to repay,
Yeah, I find the magic number with the algorithm has
it's a bit odd, isn't it?
Mhm.
Okay. 20, right.
Okay.
Yeah, some say 20, some say 25. So I was just trying to find out. Okay.
Yeah. With my research on the algorithm, I did research this for 2 years to find out how changes happen. When I saw an increase in a credit utilization above 20%, I saw a decrease in the credit score.
Yeah.
I did not on the other end see an improvement under 20%. It was kind of like 20% was the magic number to stay at or below. But I didn't see like if you were at 10%, I did not see an improvement in your credit score versus 20%, if that makes sense.
So
yeah, I've seen some people just use the card to keep it at 20%, so don't under or overuse sometimes. Yeah, I've seen the same here. Thanks.
And I have a slightly different perspective depending on the algorithm. That's my caveat. In speaking with the director of FICO last year, there was one algorithm where when you were within 1 to 9%, there was a very slight boost over the 20%, but that's only one of the FICO algorithms.
Yeah, the algorithm actually says 7% is the actual, if you want to know the actual number, 7%. So, yeah, which sounds ridiculous. Like you have a $100 credit limit and you can't use much of it, right? 7% is very small. So,
I think also keep in mind too, your creditor is reporting your balance once per month, right? So I think this always leads to the conversation of, well, can I not use my credit cards then? No, it's not about never using them, right? And in another event, we'll talk about trended data and how it's all going to change and how these things are looked at. But the algorithms, they're meant to be a predictive model, right? The whole point is how responsible are you with your credit? That determines the number that you see. So there's a lot more going on behind the scenes. And the whole point is the AI is figuring all that out for you and then helping you to mitigate or manage that effectively so you can play within the confines of the game that we're all in. So I think that's really, I guess, the take home point, if you will. Okay, so credit building tools. Allie, I don't know if you want to go into how the action plan dives into the credit building tools as well.
So Credit Score Pro, we have a lot of credit building tools that we have on our webpage. So if you went to creditscorepro.ai, you'll see those different credit building resources. We really research resources that were either free or very low cost that really did a big impact to improve the credit score. Because there's a lot of places out there that are saying they have credit building resources and people are paying $99 annual fee and a monthly service fee and all this stuff. And it's really just junk. When they could go to sources that were free or low cost. So we really did a lot of searching for that. But the really cool thing about the action plan is if the consumer needs that type of resource, it will indicate that on the plan. But in anybody, whether they're in Credit Score Pro using the AI resource or not, can go to Credit Score Pro's credit building resource area and apply, look at these resources. Which I think is really important because there are individuals out there who say, hey, I don't need credit help, even though Credit Score Pro can help you in that too, but I don't need credit score help per se. Don't have anything negative. I just don't have anything. And of course, these are some resources they that individuals can use that we've trusted in the process of improving credit.
Exactly. And I think to add on to that, part of the importance of us wanting to make sure we included these tools is not necessarily telling people, hey, we need you to go out and get a loan just to build credit, right? We don't want people taking out debt unnecessarily. There's no point in going to get a $5,000 personal loan if you don't need it, right? There are tools and resources out there that can help you build and establish credit without you having to increase your debt to income ratio unnecessarily. And giving you resources you don't necessarily, giving you resources you have access to regardless of where your score is or if you don't have a score at all. Okay, so what about financial literacy? We looked at all the statistics in the beginning. This was one of the areas we really felt strongly about because it's missing in the resources that are out there that focus on credit currently. So we wanted to make sure that consumers have the answers to their questions about credit, but also professionals do too. We want to demystify the complexity of credit, basically take the complicated concepts and simplify them so anybody can understand and digest them, and then empower people to make educated financial decisions. So one of those statistics in the beginning was about how the average person who had financial literacy issues made a $10,000 mistake because of that lack of financial literacy. Let's eliminate that from happening. We want to prevent people from being taken advantage of by predatory products. And then we want to give the ability for parents to create financially literate children and young adults. We want them to have the knowledge so they can now teach and pass it on to their children. Because as we learned, there really isn't a good solid resource in our current education system. So we have a credit coaching section. So we have 44 modules, bite-sized classes broken into different sections. So why credit matters and understanding what your rights are, understanding how the algorithms and the different score models work in the different types of lending, breaking down those score factors we saw in that pie chart and really helping you understand how they work. And then learning how to read the credit report and how do you read that credit report, but then interpret it. We really wanted to highlight a section on myths, and this is because of social media. As Ali had mentioned earlier, there is so much misinformation out there. So we took the most common myths that we're seeing perpetuated on the internet and just discussed them. And so that section is something that's probably going to continue to grow as we see new trends, new myths go out there that aren't really factual. And then finally, we wanted to start putting everything together, looking at those different credit profiles and examples and understanding what's causing scores to go up and down. And then finally, we have a section on how do you establish credit or how do you reestablish credit if you had damaged credit. And that really goes hand in hand with giving a lot of the why behind the action plan that is inside Credit Score Pro for the users. And this credit coaching section is something that's going to continue to grow and will continue to add to it as users are requesting more information on different topics. So the whole point of Credit Score Pro is you don't have to hire an expert, right? That consumer doesn't have to try to find a reputable credit repair organization, miss part of the understanding of how credit works, but maybe they get some items off their report, but it really doesn't solve anything, right? And Ali, I don't know if you want to add anything onto this before I move on.
Yeah, you know what? I think that the world is struggling for finding the resources to help improve their credit and to educate them. And they're running out to credit repair companies, and some of them are great, you know, but there's a lot of them that really are just what I already talked about earlier, heavy focused on disputing. So they're disputing and they're doing it behind the scenes. The consumer doesn't really know what's going on. They don't know what the dispute looks like. They don't know the reasons. So they're not being educated throughout this process. They may see a credit score improvement, but they have no idea why, other than maybe something got deleted from their credit report. And so this allows them to really be their own expert and to learn about how credit works so that they are in control rather than someone else on the outside being in control, not telling them why and how everything's working for them.
And so we all know it's down to the numbers. So what is Credit Score Pro actually doing? So what are the results we're seeing? So the average user in about 4 to 6 months is seeing results they would typically see in 1 to 2 years with an average industry credit professional. So shortening that time frame, really streamlining everything, utilizing AI to create those efficiencies, create that really successful process. And that's leading to what we saw in 2023 with over 1 million of negative accounts that had errors being removed from credit reports. And one of the great things too is when a consumer is using Credit Score Pro, they are getting responses from the credit bureaus confirming if something is removed from the credit report, right? They're actually receiving letters from the bureaus in many cases. And we're seeing reported higher confidence in making financial decisions. And that was the whole point, right? We want people to be financially literate and to feel like, okay, I can go into a financial decision and adequately weigh the pros and cons and make an educated decision that I am comfortable with, right? And that's really huge. And then being able to meet the needs of millennials, and we really should put Gen Z as well, by providing resources that will help them with credit in a way that they can understand and use it, right? So as Allie, you had said earlier, meeting people where they are at and the way they want the resources through technology, right? Through AI. And with that, we are open for questions if we didn't cover any of them. And I'll just throw this on the screen if you are interested. But yes, do you have any additional questions we have not covered so far?
Caleb put something in the chat about 30%. If you want to clarify that, Caleb.
I think that was related to when we were talking about credit card utilization.
Oh, credit card. Oh, okay. Okay. Got it. That makes sense. Okay. Missed that earlier.
No worries. Do we have any questions in on YouTube or Facebook?
Let me check.
Yeah, well, Allie's looking. We do these lives every Thursday. Different topics. If you want to like see what the next topics are, they are all available on Facebook. We also have several of them on LinkedIn, and then Eventbrite has all of them as well. LinkedIn, we're only showing the ones that are aimed towards professionals, but Facebook has all of them, the ones for consumers and professionals. And then other than that, feel free to visit us online at creditscorepro.ai if you want to check it out. If you're interested in using it within your organization or using it personally with your clients, you can shoot us an email at info@mycreditscorepro.com. That'll go directly to us. Coming soon, we will have the option directly on the website just to partner there. Not there quite yet. Give us a few weeks. And then other than that, we do have a Facebook group you can also join as well. Good question. Is the AI free and open source? So the AI is free. Users only pay to access their credit reports. So yes, we did make the AI free. It's not open source for people to build off of though. So did I miss any questions on the live side of things?
Did you check the chat just to make sure?
Mm-hmm.
Okay.
I think that might be it for today. I don't know what time it is, so we might even be over.
We are at time, so perfect.
Okay, perfect. All right, well, we will let everyone go for today. And then we will resume. I'm going to stop sharing. We will resume next Thursday, 2 p.m. Pacific. And the topic for next week is consumer-based. And I always take forever to go to it. So events. Okay. Next
Navigating
week
your credit.
is yes. Next week is navigating your credit, essential insights. And then the week after that is mastering credit reports. So that's really diving into how do you read credit reports and interpret the information. So the rest are all listed, like I said, on Facebook or on Eventbrite, and we will see you next time.
Awesome. Bye, guys. Thanks for being here.